Welcome back, Principles of Accounting students. We are on part 4 of the never-ending video series that is describing the various budgets that are part of the master budget for a merchandising company. We're kind of towards the end of it, yay! Then we get to do our financial statements, but this is the cash budget. So all the cash budget's doing is tracking at an aggregate company level how much cash your company has. And like always, over here, apparently I need to hit spell check on my Excel document. You know what? Let's do that now, because some of you might not know how to spell check. There we go. We'll hit spelling, and it's going to tell me everything I've been doing wrong. Yeah, let's continue. Oh yeah, can't spell receipts very well, can I? All right, change all. February, yeah, one day I'll learn how to spell that correctly. Actually, all these are all just typos. I'm going to ignore those because I was abbreviating. Miscellaneous, ooh, that's a hard one, huh? Apparently I spelled it different ways, different times. Depreciation as an accountant, how could I possibly know how to spell that? Receipts, let's change that. And beginning, okay. So at least for this sheet, most of my stuff should be spelled relatively correctly now. I'm not going to go back and change it on previous videos. All right, here's my cash budget. And over here I've got beginning cash balance, all right. Minimum cash desired, right? You always want some cash in the bank just for emergencies, or sometimes there's loan covenants that say your cash can't fall below this. Call that restricted cash. Interest rate monthly. That's a really high monthly interest rate, by the way. Well, I guess not. 24%. I've paid 18% on stuff before. All right, so it's doable. And in beginning, and it's always good to charge companies more higher interest rates because they can pay it, but also they're always a little riskier than some consumers. And then you got your beginning loan balance of $100,000. All right. One of the things that's not in the book, I like tracking loan balance down here. It's just very helpful, so I'm going to put that there. Or actually, no, I'm not yet. I'm not yet. Forget I said that. All right, my beginning cash balance is going to be $50,000. My cash receipts. Well, how do I do that? Ooh, where on all of these budgets did we do cash receipts? Well, probably not in any of the payment budgets, and there's only been 3 so far, right? We have 3 budgets. There's the sales budget with the schedule of cash receipts, and then there was the 2 payment budgets, one for inventory, one for S&A. So I bet if we go up here, and this is always terrifying, right? You're taking this leap of faith, but now if you go up here, trust me, I've done this before, to the sales budget, here's your cash receipts. All right, so there's your cash receipts. Now, this tells us our cash available, right? You take our beginning cash balance plus the cash we've received. That's how much cash we have to spend. Yes. All right. Now your cash payments for capital expenditures. In this example, we didn't buy capital expenditures. I just left it in there because it's part of the standard budget. But sometimes you buy a piece of equipment. That's capital, and we depreciate it more. All right. Then we have inventory purchases. That comes from your inventory purchases budget. So cash from inventory purchases, if we go up here, there's your S&A budget. This is your inventory purchases budget. And there's your cash payments. Now we have cash for S&A expenses. Hey, that's even on the same screen. That's right there. Now we have interest expense. Here, we can make this a little bit larger now. All right, we have an interest expense. Well, we know that we have a loan, and you pay interest on a loan of $100,000. And I gave you a monthly interest rate to make it easy. So that's how much interest we're paying. Interesting. All right, so our total cash payments are going to be everything we spent for capital plus inventory plus S&A, plus interest, which gives us the cash before financing. And all that is we have this much available, and we spent that much. So we have 55,910. Now we only want 45,000 in cash, so we can give everybody bonuses, right? Typically in these situations, we'll pay off any debt first, and that's what this excess deficiency means. So if this was a really low number, let's say 0, you'd have to borrow 45,000. All right, so let's see. We had 55, we only want 45. We have an excess amount of cash of $10,000 that we can do anything we want with, right? Because we only want 45 in the bank, so that 10,000 either gets invested back into the business or it's going to pay down debt. In this schedule here, we're going to pay down debt with it. So we're not borrowing anything, we're going to repay. How much are we going to repay? We're going to repay 10,910. Which means your effect of financing is going to be 10,910, which means our ending cash balance is going to be cash before financing minus that is 45,000, which is exactly what we wanted. What's our loan balance? Well, let's see, we have our beginning loan balance. Then we're going to add anything we borrowed. And, well, I have negative here, so we're subtracting the repayments, which is also adding. So now we owe less money, which means we'll have less interest expense, which means we'll make more money. And that's the goal, right? We want to make lots of money. All right, so then let's move over to February. The beginning cash balance in February is going to be the ending cash balance in January. And if I want to be really slick, I know that the beginning cash balance in March is going to be the ending cash balance in February. That number will populate later. So when I put a number in here, this number will update. Cash receipts. So I know I grabbed this from the budget up top, which was the sales budget. And I did it as a formula, so I can just add those. If I just drag those over, they automatically add, right? H16, I16, J16. It's just grabbing that whole row. Here we added these. If I just move that over, so far so good. Now this number will be higher when that changes, but we'll get there. Capital expenditures are still 0. And in some of the advanced classes, we do have a capital expenditures budget. Inventory purchases. We got that from the inventory purchases budget. I can just drag this because we set up our spreadsheet to be smart. S&A expenses. It's going to copy that formula over. That's from the S&A budget. Interest expenses. Let's see, I'm taking C62. I can't do that one yet, but I can take that, which is our last quarter's loan balance, times 2%, freeze to 2%, and drag that one. That'll work out in a minute. Total cash payments. I'm also going to I'm going to drag these here. We'll see what happens, because these are all formulas. Okay. So our cash before financing is just a formula. Look at that. That's what we were looking for. See how that just populated on us? Format it real quick. It's pulling this data here. But we're not done yet. Minimum desired. Let's take this G60 and put the parentheses around it, because the minimum desired won't change. It could in some models. They might say, oh, we want to keep 10% of next month's expenditures. That would be a revolving minimum desired. Here we're just doing a flat minimum desired. Let's see, we didn't borrow anything there. Looks like we have excess cash each month, so we're never going to borrow. Here we're going to repay 18,000 in loans, which also means I can take this and drag it because it's a formula. And that's going to give us our $45,000, which is the beginning cash balance here. What's our loan balance? Our new loan balance, we can also just drag that because we already set up the formula. Now we're almost complete, right? We have, hold on, something's wrong here. Yeah, I didn't do the formula right there. All right, so 89 minus, how much are we repaying? 18. There we go. No, that's not right. Equals 89 minus the repayment. There we go, 70. You could tell it was wrong when it went the wrong direction. So far, so good. All I gotta do is figure out what I'm repaying here. And I have excess 22,656. And we should have the cash balance. My loan's progressively going down because any excess cash, I'm spending it down. If I needed cash, my loan balance would go up. Ending cash balance would be $45,000. You'll occasionally, actually, professors love doing this to their students. I've had to do these. They're going to say, oh, you can only pay off in increments of 1,000, which means here we could only pay off 22,000. And that would be interesting because that would change these numbers a little bit. All right, finally, totals. Well, the beginning cash balance is going to be this. The cash receipts will be total. So notice with the beginning cash balance, you're not totaling it. The cash available will be 393. Inventory purchases you would sum because we're looking at a total of cash. In fact, all of these. Total cash payments, actually that one could be summed as well. Cash before financing, we can, minimum desired is still 45,000. I want to just double check that number because it should still be this minus, yep. All right, so far so good. And our excess / deficiency can have an extra $56,000 in excess cash throughout the period. We borrowed exactly nothing. We repaid the sum. Hoping this works. And the total effects will be the same. The ending cash balance is going to be 45,000. And that should conclude G66. I want to make sure I did that right. Yeah, I did that right. You could just kind of drag the formula if you wanted to. That would work as well. Woo, that was close. All right. Our loan balance, of course, would just be that number right there if you wanted to carry it over. Well, that was intense. This one takes a while. I used to give a big, fat Excel assignment on this one. It was always fun watching people struggle with it. And I like watching you struggle. No, but you learn a lot doing these. These are cool. You'll see them a few more times in your life. They'll show up in finance classes. They show up in a lot of places. They're kind of neat. So that's your cash budget. Very good thing to know. I will be back with the pro forma income statements. Have a good one.